All right. Well, from listening to Michael in the past, when he talks about gold supply, it's clear to me that he doesn't have a real understanding of the gold mining industry. Just before I talk about supply, let me just clarify on demand. So about 50% of gold demand comes from jewelry, mostly from India, where it has deep cultural ties. About 20-25% comes from central banks, and they've been buying furiously over the last 10 years. And the other 20-25% comes from investment. These numbers fluctuate a bit, but they've been pretty steady over the years. So that's the demand side. On the supply side, I think Michael has made some very erroneous assumptions about gold and gold production. I've spent my entire adult life financing gold development and exploration around the world. And I can tell you, even when you find it, it's not easy to mine. The average period between discovery and production is 10 to 20 years and sometimes longer. And the grades are getting lower and lower, and it's becoming very expensive and time-consuming to find these deposits. No world-class discovery has been made in the last 30 years. All the gold discovered in the last 10 years is less than half of the amount of gold that was discovered in just 1 year in 1990, when gold was under $400 an ounce. The gold mining industry is facing an existential crisis when it comes to its reserves. They're depleting and they can't replace them. Over the last 8 years, the reserves held by major mining companies have dropped 40% over the last 8 years. And as I said, the grades are getting lower, which means you have to move a lot more debt, which raises the costs exponentially. So there is one big problem. And the truth about mine supply that's going to really help Michael here, because I don't think he really understands how price does and doesn't affect gold. In 1971, when gold was $35 an ounce, the global production of gold by mining companies was 1,500 tons. Scroll forward 50 years, gold's gone up 50-fold, 6,000%. That number has only doubled to 3,000 tons a year, which averages out to 1.5% growth per year, which is about the same you see in terms of population growth. Now, comparing it to Bitcoin, yes, Michael's right, Bitcoin's supply is capped, but there's still a supply of 3 to 4% inflation a year, which is obviously declining over a period of time. But I see a lot of risks in Bitcoin before you reach that zero inflation rate. So I see both gold and Bitcoin have inflation rates and supply, and you can argue that both supplies are declining. So I asked Michael, as the gold price continues to go up, where is all this extra gold going to come from? Now, I've heard you talk about asteroids. I've heard you talk about some new alchemy process. And if you seriously believe that, bring it on. But I suggest you don't go there, because that just doesn't make any sense. The fact of the matter is that for both Bitcoin and gold, it's not the newly mined supply that you need to be concerned with. It's the existing stock. And the question you need to ask is whether it sticks as the price goes up. And I've got a lot to say about that. So you got to stop saying that there's an infinite supply of gold if the gold price goes up. It's just simply not true.